The downfall of GE has just gapped down again even further. JP Morgan slashing its price target on shares of the one-time American industrial giant to $6, becoming the stock's lowest PT on the street. PT is short for price target, yep. Analyst Stephen Tusa forecasting 6 of GE's 8 units to show you heard me, no growth by 2020 in his latest note, which also slams the company's deteriorating fundamentals. The former blue chip trading near its lowest level in nearly 10 years at the low today, $8. I want to get this right because I looked up and I saw it and I said, no way, $8.15, low of the session.
Even you could afford this stock.
Charlie.
By the way, these batteries are powered by GE, I believe. See, they actually do something right. I mean,
they do a lot right.
Let's just get to some of the reporting that I've done on GE. There was a rumor today that they were going to bring back, hire some major, make some major hiring. It's not true. There's lots of rumors going on about what might happen going forward at GE. What I'm going to tell you now is not rumors. This is what I know from inside the company, that it is still working on a plan to figure out what to do with it, how to deleverage, how to fix what is clearly an issue here. And it's this, and this is what the people inside GE will tell you. It used to be that the whole of GE was bigger than the sum of its parts, that as a combined entity, whatever Jack Welch, the legendary CEO, put together, that was worth a lot more than even if they spun off each unit. The opposite is going on right now. What they believe is that the analyst community and investors don't buy the notion that the 3 main companies, I guess aviation, healthcare, and what else? And power. That those 3 things are better off together than they're separate. What does that mean for the company? Now, there's obviously two ways to go at this. You try to fix what you have right now, but clearly you try to break it up. You break it up into those 3 pieces, and that's what you're hearing from longtime GE executives I speak to, who have sources inside the company, that is clearly on the table. Not saying they're going to go that way. But Larry Culp, the new CEO, and by the way, it makes complete conceptual sense in this sense.
I think he had just made a huge stock purchase. Well, huge. He bought some stock because that when insiders buy, it looks like a vote of confidence here. Now, and he bought it well above where it is right now. I'm not exactly sure. I can check, but
we should point out that unscrambling the egg is not that easy, right? Taking this company down to
I didn't realize you could unscramble it.
That's what I'm saying. It's just, I mean, can you really legitimately break this thing up into 3 pieces? It's hard, but investors are clearly saying you got to do it. The analyst community, Steve Tusa came out today from JP Morgan saying this is a $6 stock now.
He bought it at $9.73 per share on Thursday.
Well, listen, there's also a theory that he's basically planning for the worst, but he doesn't. He's basically taken all his write-offs and everything now, taking much more than he needs to prepare for the future, to keep a little bit in the bank. But I'll tell you, and this is where it gets interesting for an investor. It's no longer a dividend stock. Now you got to buy it if you think it's going up.
What are the spokespeople saying? They
will not deny that the company could break itself up. I mean, we asked them that specifically. Jennifer Erickson, who's a pretty straight shooter, she basically came out with a non-denial denial. She said GE is fundamentally a strong company and that management has taken extraordinary action to strengthen our balance sheet.
Can I just quickly ask you what you thought of Peter Navarro calling Wall Street unregistered foreign agents for trying to convince President Trump to quickly end the China trade war?
God, you're throwing me a curveball there after I'm talking GE.
Sorry, I just have to get your thought on that because you know Peter. We know Peter. He's been on the show.
Peter's a nice guy. I really like him. He's a firm believer in protectionism. But listen, if it wasn't for Peter Navarro, I believe I was somewhat educated by him about how pernicious China is. I get that, and now I give him credit for that. I mean, I think him bringing that to the forefront of the national conversation is very good. It's very good for business because business was literally laying down, giving stuff to China to get access to its consumer, its gazillions of consumers, its markets, and it was hurting the country. He deserves credit for bringing that to the forefront of the national conversation. Protectionism, though, has never been a good economic policy. And there are, I think, better ways to go at China through TPP. Remember, Trump got out of TPP, Trans-Pacific Partnership. That was a trade deal with everybody but China to isolate China. He got us out of that. I think they
didn't quite get a chance to really work its
and not
magic.
only that, he goes after our trading partner. I mean, Mexico is not our enemy in trade. You know what I'm saying? You know, it is what it is, and neither is Canada. So I would say that I appreciate what Peter brought to the table on China.
Okay.
I will say that tariffs never work. And by the way, one company that will get crushed by tariffs is GE, which is a multinational company that sells a lot overseas.